Welcome everyone to Vested Interest. This is Shane back again for their stock pick of the day video. It is November 7th, my mother's birthday. Happy birthday, Mom. Actually, I need to call her after this video. We are going to take a look at one out of the material sector today, air products and chemicals. Let's jump right in the video. If you want to know more about this company, check them out at www.airproducts.com. That's www.airproducts.com. That is their homepage where I pulled this information from. Welcome to Air Products. Air Products touches the lives of consumers around the globe in positive ways every day, focused on serving energy, environment, and emerging markets. We provide essential industrial gases, related equipment, and applications expertise to customers in dozens of industries, including refining, chemical, metals, electronics, manufacturing, and food and beverage. So they have their hands in a lot of different companies. They are a materials company that supplies the gases and materials that other companies use to make their products. We are also the global leader in the supply of liquefied natural gas process technology and equipment, right? So there's another big one, natural gas processing technology. Air Products develops, engineers, builds, owns, and operates some of the world's largest industrial gas projects, including gasification projects that sustainably convert abundant natural resources into syngas for the production of high-value power, fuels, and chemicals. Founded in 1940, so they've been around a long time, Air Products has built a reputation for its innovative culture, operational excellence, and commitment to safety and the environment. Our passionate, talented, and committed employees from diverse backgrounds are driven by Air Products' higher purpose to create innovative solutions that benefit the environment, enhance sustainability, and address the challenges and facing customers, communities around the world. So again, they are a material company that supplies a lot of the chemicals, gases that other companies use for their businesses. www.airproducts.com, that is their homepage. You can check them out there for more information. Now, the reason we are looking at them today, down 12.65%, huge drop on the day. Again, I'm going to take a look at any company that pays dividends that has a big drop like this on the day to see if there is potentially any value there. We are talking about Air Products and Chemicals Inc., ticker APD, out of the materials sector. Closed the day out at $254.46. 52-week range as low as $254.02, so they are right up against their 52-week low, as high as $328.56. Average volume was 714 million. Today's was 4.4 billion. You can see pretty much a sell-off throughout the day. Market cap of 56.528 billion. Apologies, I'm about to lose power here, so I'm plugging in. Market cap of 56.528 billion. A beta of 0.87. They are a little less volatile than the overall market. High PE ratio on this one, $25.99 per share, though this one is one of those companies similar to Coca-Cola and several others that always seems to be trading at a premium. So it is hard to find this one on sale. Maybe throwing it on the watch list and watching it, maybe it pulls back further. But this, again, is one that I always look at and always feel like I want to add. But then I look at the PE ratio and I think, man, it's really elevated. And it just is one of those companies, right? Earnings per share is $9.79 per share. Earnings date, November 7th, so it was today. So I'm sure there was something about either their earnings, they missed revenue, maybe they missed their forecast, or they may have adjusted guidance down. You'd have to look at their earnings to find out exactly what it is, but earnings was today, so I'm sure that's part of this downtrend here. Looks like they're up a little bit in the after hours. And for dividend is $7 per share. They are a quarterly payer. We'll see that here in a minute. They have a decent dividend yield, starting dividend yield of 2.4%. Ex-dividend date, September 29th. We're already past that. Looks like they're going to pay out on November 13th. So if you were to buy them now, you would not get this November 13th payout. You would have to wait for the following. And a one-year target estimate for the stock price, at least according to Yahoo Finance. I'm not affiliated, just one of the sources I like to go to. They see it getting as high as $334.03. So they definitely see it going above its 52-week high currently and setting a new 52-week high. Now, I like to get into statistics, look at dividend yield theory to see if this is potentially undervalued based on dividend yield theory. To do that, we go down to dividends and splits. We look at their 5-year dividend yield average of 2.18. We compare it to its current 2.4%. Over here, same thing, forward annual dividend yield, same number, 2.4%. And since it is higher than their 5-year average, not a lot higher, but it is higher, speaks to some potential undervaluation on this one. They have a payout ratio, I like 75% or less. This is at 68.92, so it is getting up there, but not to where I would be too concerned on this. Again, I like 75% or less, so it meets that metric there. potentially undervalued, at least according to dividend yield theory. Now, going into financials, you're going to find a lot of good information here. And if you are an individual stock picker, you should be looking at the financials of a business, looking at the balance sheet, looking at the income statement. What are their debt to equity ratios? Are they paying down debt? What does their revenue look like? Is it growing? How are their profit margins doing? Is it increasing or is it decreasing? Are they paying off debt? A lot of good information, but we are going to look at free cash flow. We want growing free cash flow over time because we want growing dividends over time, and dividends are paid out of free cash flow. So I went back to 2020. 755 million here. 2021 up to 877 million. 2022 big drop down to 303 million, and looks like this might be part of that reason for the drop today too. Looks like they are in the negative here, so there might be some write-offs or they're just having a rough time right now, but that is not good. So overall from 2020 to date, negative free cash flow, I would say, not growing, it's decreasing actually, especially from 2021 to date. So that is not a good sign. They did not have a section where they were repurchasing any shares, so they're not repurchasing shares. So again, I would get in and look at their earnings today that was reported and see what's going on with this one, but I don't like that their free cash flow is negative. Let's keep going. Now, I always recommend more than one source. So another one that I like is stockanalysis.com. You're going to find a lot of the same information that Yahoo Finance gives. They go back further in time than Yahoo Finance does. That's part of the reason that I like them, as well as they show the information in a different manner. Some of it, like this forecast, is really easy to read and understand. So that's part of the reason I like them. And you should pick more than one source. Pick any 2 sources or 3 sources you like. Just make sure you have more than one so that you are checking the information you are getting is accurate and up to date. Now, they have 14 stock analysts that have taken a look at this. They call it a consensus buy. They have a low estimate of $305. It currently sits down quite a bit lower than their lowest estimate. So if it was to come back up to their lowest estimate, that would be a 19.86% increase from where it currently sits. Average price of $333.79 per share, which is pretty close to what we saw with Yahoo Finance on the previous page. That would be a 31.18% increase. And if it happened to hit their high of $385, that would be a 51.3% increase in the stock price. All the while, you could collect that 2+% dividend yield if you were to buy them now. Now, same thing, I like to get into statistics and look at return on equity and return on invested capital. I like 10% or better for both of these, or in line with their industry average. Return on equity, 15.9%, beats the 10% I'm looking for. Return on invested capital does not. It's at 7.95%, so below the 10% I'm looking for. So a mixed bag here. EPS growth is very nice, though. I like 5% or better. They're at 12.46%. Very nice EPS growth, and very nice estimates on their revenue growth, 8.39%. So that would help with their elevated free cash flow, and hopefully that would help with their negative free cash flow that they're currently in right now. But I don't know if it's enough to offset that. But again, they could have some write-offs. A lot of times whenever you see big positive numbers, and then a big big negative number, it might be a write-off. They might have a one-time write-off. They might be doing CapEx, a lot of capital expenditures, reinvesting back into the business. So you'd have to really get into the numbers and figure out why they went negative so far this year. And the year's not over. Maybe they turn it around. Now, I like to look at the dividends. As we said, it's a quarterly payer. They do pay out on the February, May, August, November timeframe. Payout ratio, they say it's 71.21% on stockanalysis.com. We saw 68% on Yahoo Finance. Let's just cut in the middle and say it's around 70%. Still under the 75%, though it is starting to get a little elevated. Anything over 75%, I start to worry if a company's dividend is sustainable, if they have enough to continue to pay down debt, to continue to increase it over time. That's why I have the 75% cutoff. You can use a lower number if you like. Some people like 60%, 65%, 50%, whatever number you like. You set your own criteria. Just have some standards and criteria that you are using. Dividend growth, nice dividend growth on this one, 8.02%. I went back to 2020, it was $1.34. They raised it up March 31st, 2021 to $1.50. Raised it up again March 31st, 2022 to $1.62. And again in March 2023 to $1.75. So I would assume if they're going to maintain this dividend growth in March of 2024, you should expect another dividend hike. Well, that This is the vested interest stock trainer. I was going to say that's it for this one, but I always touch on this. Understand the business, growing free cash flow. This is how I set up the videos, as well as how I look at a company on a high level. Growing dividend payout ratio of 75% or less. Check valuation based on dividend yield theory, right? This is exactly how we walk through the videos. Buy below current cost basis or within 15% of its 52-week low. This one is definitely up against its 52-week low. Return on invested capital, return on equity equal to or greater than its industry average or 10% plus. And earnings per share growth equal to or greater than the industry average or 5% plus. I really focus on the 10% plus and 5% plus, but sometimes if it's lower, I'll look at companies in a similar industry and see where they're at. Maybe it is a little bit lower than the number I put. Financial companies, I add in price to book. You can use price to book. Really good for banks. 1 being fair value, anything under 1 being below value, anything over 1 being overvalued. For banks, that is. For other companies, you want to compare that to other companies in their sector, because sometimes price to book for those companies can be elevated. For regular business, not a financial company must meet 5 of 8. For the financial company, it must meet 6 of 9. Now that is it for this one. What do you think of Air Products and Chemicals Company? Is it in your portfolio? Is it one you're watching? Is it one you're avoiding altogether? Drop it down below. As always, appreciate you stopping by. If you haven't done so already, don't forget to show me some love. Hit that thumbs up, ring the notification bell. Most importantly, subscribe to the channel. Join us on this journey to financial freedom. Join the vested interest community, building a community of like-minded dividend growth investors so we can share our experiences, stocks we're watching like this one, stocks we may be buying, stocks we may be avoiding, all of the tips and tricks that we've learned along the way as investors. We cannot benefit from each other's investing, but we can certainly benefit from each other's experiences and knowledge base. I do personally read and respond to the comments. I'm always interested to read your questions, opinions, or suggestions for future topics. So if you have a company like Air Products, Chemicals Partners, drop it down below and I will work it into the rotation. And this is Shane signing off, wishing peace and prosperity to you and yours. And remember, financial security comes to those who take a vested interest. Hey, thanks for stopping by, and we'll see you in the next one. I'm not a financial advisor. Nothing in this presentation should be considered financial advice. I'm only sharing my opinion and investing journey for educational and entertainment purposes. Investing involves risk. You can't lose money. You should never invest any amount and not comfortable losing. Always do your own research. Invest based on your situation, circumstances, and select criteria, or seek the advice and counsel of a certified financial advisor.